Hello, Warriors. New day, new week. Let's have a good one. Hello, Shahab, Ingmar, James, Bran. Hi, Marcus, Laura, Patrick, Glenn. Hi, Ryan. Ryan Varghese, hello. Hail to you, Bran. Flatco Market. Markich, welcome to F.A.C.E. Nice to meet you. Okay, so here we go. So last Friday before the NFP, I said I was looking for a rally back to 102.50, and we held that low after all that wild action. I still think this confluence right here is an area I'm waiting for to take action. Seems like a lot of the dollar strength is coming from U.S. dollar yen, and unless you think this is an important low in the yen, there's probably it's a rally to sell in the dollar as well. So, maybe up here. It should have some trouble up here. Okay, and actually what's holding up the best, Dixie still hasn't bounced. Okay, I'm not bullish the dollar. I'm looking for places to sell it. I'm actually so short. So Aussie is approaching a level that I wanted to buy it at. But since the Dixie isn't at that level yet, I want to see where Aussie is at. I think it's a good sign it's starting to hold up a little better. And but I'm not going to jump the gun just because it's at a moving average if I think the dollar has more left. So why don't I bring Ryan in? Oh, one other thing. I'd like to know from everybody, who bought the close in S&Ps on Friday? Wasn't that a good technical signal, Ryan, to buy that close?
Me, I don't buy nothing on a Friday night.
I'm just saying there's no reason, right?
Yeah, exactly.
So what lit up risk?
I think we just seen a bit of a snapback to what was going on last week. The market was up and down over this 50,
Yeah.
50, 25, 50, 25. I actually noted the timeline of all those headlines, and when Wallace spoke, we priced a 50, and then 4 minutes later we were pricing a 25 again. It was just all over the place. So I think we're seeing the market largely coming around to the idea now it's going to be a 25 rather than a 50. So all the 50s are getting out of whatever trades they were in, and the market's now settling down and it's happy. So it's going to be a bit harder, I think, to push the downside in the dollar and yields, unless we get obviously some big negative numbers out of the CPI.
Okay. Let's take a look at what's happening in yields. I know that they're near a prior low on the 10-year, bouncing a little bit.
Yeah.
So
we managed just to take out that August low, which came at the last NFP and ISM. And
right.
But you look at those wicks, that tells you the story, really. Those wicks on yesterday's or the other day's price action. We can't hold a move down there.
Okay. Yeah, they both look like two drives. Okay, so you have 1, 2, they're pretty far apart, but that's a 4-hour, and you kind of have that going in TLT too, right?
Yeah.
So TLT might be under pressure. It tried to break out over 100. Couldn't do it on this attempt. All right, so why don't we move? We have ECB today. Everyone keep a good thought for K-Man. He's under the weather. So Ryan's doing double duty. I'm not ready to buy the euro yet either. So I didn't short it up here on Friday, but I still think there's a chance for some, maybe as deep as 940. That's 61.8, but I think I'll try it under 110 if we get there in the next couple days. This should be maybe 102.50.
Yeah, I would have liked another move to 112 on Friday. I would have looked to hit that, but there's a lot of support around that 110. It's the
Yeah.
38.2 fib of that August move, around there. It's also the 50 fib, I think, if you zoom out a bit, of the whole leg from
There's
the beginning of the year.
from the whole beginning of the year. Okay. Because it's a
So
50 fib from just this recent, well, yeah, the recent rally. Same
yeah,
thing, yeah.
that's
All
the
right.
50 fib. So it must be I think it's a 38.2 of the August rally, of the years, or that second leg up from
This leg.
where are we?
Yeah.
Let me just
All right.
yeah,
So
let me
I
just,
have it too at 109.80. And there's a lot of confluence coming in here, Ryan. Good eye.
yeah,
You have the broken trend line. You have some moving averages coming in there. You have a
yeah,
fib. So that's a number to pay attention to. Do you
yeah.
think this bounce in the yen is just that, or anything more than that?
No, I think it's just following yields at the moment. 144, 144.20 is the resistance up here. Again, this one looks very important because we did try that August low, that early August low,
Yeah,
and we pretty much matched it.
yeah,
So that is now, it was an important level when it first happened. It's an even more important level now. It's confirmed
yeah,
it again.
yeah. It kind of looks like, where a lot of things held, even risk. I could look at things like NASDAQ, you know, near the 200-day, it's starting to hold, right?
Yeah.
And S&Ps couldn't even get to the 200-day. Do you think we're just going to blow to new highs? I mean, if any market could do it after an ugly week, it would be this one.
Yeah, I'm not so sure because we are seeing a bit of softness still in the data, but you've got GDP that's still coming up 2%. If that starts to turn around, if we start getting some 1% and low 1% GDPs, I can't see how stocks will hold up under that sort of
Yeah.
turnaround in the economy. So I'm sitting here right now, we put a gun to my head. I think it's more likely we go down than break the highs.
Okay. And look, Dow, same thing on the daily, 200 days. So a lot of 200-day moving averages, the market pulled back to, and we're bouncing, and under Friday's low, it's big problems. So that's the way it
It's
kind
a
of
good
looks to
technical
me.
market, isn't it?
Yeah. Yeah, it is. And gold, that was a
Gold.
good pull. That was it's so dull. That was a good pull on not trying to buy that breakout. Did we make a new high or we missed it?
No,
We missed,
no, we confirmed the range pretty much
yeah,
on the dot.
50,
So
25,
this,
31. What was this?
yeah,
Yeah, they never
30s and
took out this high. So,
no. So
um,
this one's going to go one way or another at some point. You know, it's going to bust up. Oh, we get see all your search history there.
yeah, I hit something, it came up. I don't know. Anyway, there we go. Okay. Silver acting better than gold. And Greg I think, had to put out a buy looking for this area in here to hold. Wrong on, I think, under 26 and a half. So gold silver
Yeah,
ratio, maybe a double top up here. Anyway,
that's looking more like the gold chart, isn't it?
yeah,
Confirmed top and confirmed the range down below that 84 area.
yeah.
So yeah, it's when it goes one way or another. I think that's a trade to go with. So it doesn't matter what your bias is. If gold breaks the high, I think you've got to go with that. And if we break below 24.70, perhaps you've got to go with that.
Look how long we've been diverging during this. It's starting to look like a wedge. I know some people are calling it a channel, but I don't know. Could it be a wedge?
Yeah,
Well, rising wedge here. So, and this will probably come in just a little bit under your box.
yeah,
So maybe we're going to have on the last push up in the dollar, maybe we get I'd be really careful being long gold. If I was to be long precious metals, I'd go with this. Silver's getting a lot of good press lately too. There's a battery they're talking that I forgot who invented it that uses silver it lasts longer. I think it's cheaper than what they're using. And anyway, we're going to start hearing more about industrial use. But, I guess the big story really is risk rebounding, and we'll see if it's more than a couple days.
Yeah.
When I bring Blake in, Blake, I know we're thinking about everything that happened last week and what lies ahead into, heading into, the fall, which is only a couple of weeks away. Thank God. Temperatures will start to drop for us. I'm short temperature right now, looking for a decline in the Fahrenheit of I'm looking for about 20 degrees on the trade. My buy stop is at 120 degrees.
All right. Yeah,
That's
my
my
buy
weather
stop's about
weather
there
trade.
too. Mine's at 122 actually, since
Oh,
I've lived it, no problem.
okay.
So,
All right.
but as I get older, yeah, above
How are you,
122,
bud?
I'm like, I tap
How
out,
are
buddy.
how are you, buddy?
Good, good. I was traveling this weekend so I was in the beautiful city of Salt Lake City for just son's travel schedule anyway. It was good. It was nice, nice being out and about. And coming back this morning, I was pretty shocked to see. Well, I shouldn't say shocked. To see the dollar bounce back, it's not super surprising based on the mixed data that we saw on Friday. I wasn't surprised, that we got, such a mixed reaction, and then we saw a bit of a pullback today. And so as a result, I'm using today as an opportunity to reestablish some positions that I took off. And like I just sold the dollar yen about, I don't know, about 40 pips ago, I guess. No, 30 pips ago this morning. So you talked about that, Dale, about
Yeah.
it bouncing. Well, the 38% retracement is really close to there. And we sent that update on ForexAnalytix. I actually even tweeted about it as well. But I think, some of the bigger developments are going to be when or if the euro reaches that 110 level, as you're pointing out. Yes, there is a confluence of support down there. Here, I'll just go ahead and take
Okay,
over the
bud.
charts real quick. Let me get over there really fast. Everything up. So yeah, if you look at the euro, as Ryan was just mentioning, it is a 38% retracement from the trend lows, the entire trend lows. But if the most recent move, the August move, as you guys were pointing out, it is, you got the 50% retracement there as well. So you can see it is a big confluence of support. And that's exactly what Ryan was just saying with you, trying to illustrate that this is, whoops, not that.
Yeah.
Grab the wrong thing here. That is big support, and it would also be flag support should we get down there too.
Yeah, it looks like a flag, and a lot of eliticians are calling this a 4, which implies one more high before we get another correction.
Yeah, so what that would look like for those of you that are like, wait, what's he talking about? It would be a, here we go. Look just like this.
Yeah.
And 5 would be somewhere up here, and it should fail around the 113. The 113's got there's going to be a lot of resistance up here should we make it to 113. Now there's a truck ton of stuff happening this week that could really influence that, and one of them being, we have CPI on Wednesday, but more importantly, we have the ECB happening on Thursday. So is it Thursday morning? Yeah, it is Thursday morning. So Ryan, how are you reading the ECB this week?
Yeah, it should all be about what they're going to do over the months ahead rather than what they do now.
Right.
We get the latest forecasts, and it seems they only want to change policy at a forecast meeting just so they can see what's going on and use it as an excuse, buy themselves some time. So I think, this meeting is going to be important for what they do the rest of the year rather than what they do on Thursday.
And by the way, I want to say great job on the week ahead video. I watched it actually in between, well, after our first match on Saturday. And I watched your whole week ahead video while in the hotel room. It was very well done. If you guys
Right.
didn't jump in there and check out Ryan's week ahead video, you need to, because it really is great about preparing you for the week. So thank you so much, Ryan, for stepping in this week.
No problem, mate. Always a pleasure.
Yeah, it was great. Okay, so you talk about the ECB. It's not what they're going to do, because they are going to cut rates. But it's what they're going to do in the months ahead. And what are your thoughts as far as the ECB goes? I mean, you have so many people that so many analysts and economists that say Europe is just an absolute train wreck. They have to be cutting rates probably, they probably have at least a full percent and a half of rates to cut over the course of the next several into 2025. But where do you sit as far as the ECB expectations go?
Yeah, it's not. Let's put it right. It's not a train wreck. Okay, the economy isn't in huge recessions. None of the countries are in huge recessions or seeing recessions or anything like that. We've been talking about it for probably the last 18 months, if not 2 years. It's bumping on the ground. So yeah, we may see it tip into recession, but is it going to be unless it's a big contraction? We start getting GDP minus 2% or something. All this 0 point this, 0 point that. It needs a spark. It needs a bit of a spark, but if global growth's in the same position, you're not really going to get that spark. So it's a global problem. But as far as expectations go, it's the same thing. The market always likes to get more dovish than needed, and I don't expect this time to be any different. So we could see the euro maybe facing a bit of selling pressure coming into this ECB meeting if the market does get a bit dovish. And then the usual happen, they'll cut and probably euro rally after.
Yeah, so maybe that would be the reasoning why the euro may trade down towards 110 later on this week, as a result of that. Now, but here's the thing, and as you pointed out, the market tends to they tend to overshoot. I mean, let's talk about the Fed and what the market's expecting out of the Fed. The market's expecting 4 rate cuts, maybe to front load 1, maybe 2 meetings. You're seeing a little bit of that get unwound today. Is that correct?
A little bit of the 50s basis points getting unwound.
Yeah.
I think anyone that thinks they're going to cut 100 basis points by the end of the year, I think that's still a little bit toppy. I think 75 pips at the most, maybe probably 50 would be my bigger probability, but I can see them maybe going 3 cuts. And I think all we're seeing today is just a bit more washing out of the 50 basis point cuts. And I mentioned last week and on the Flow Show today, we've had 2 trades at play. You saw all the short termers trading those 25 50s all after the NFP and over Williams and Waller and whatnot. But the bigger move has still been that yields have come down. We got that bounce after that August NFP, that shock move down. And then, as we know from last Tuesday, yields did nothing but come down, the same as dollar yen, which came down over 500 pips. And that came down irrespective of what the data was doing. So I think that's the longer term trade that the market is thinking, let's lock in yields up here. Let's buy some bonds for rates coming down. And then in between that, you get all the monkeys playing with a 25, 50 pip cut thing and jumping markets all over the shop.
And if you guys didn't see the week ahead video, make sure you go back and listen to it, because Ryan does a great explanation on why you should be watching the 2s. Which, by the way, just you can see they're trading pretty buoyant. The yields in the 2-year notes are pretty heavy right now, even after the overnight recovery. So again, if you haven't listened to the week ahead video with Ryan, make sure you do so. Now let's talk a little bit about equities really quick, and where we're at. And Dale, I tell you what, I actually went quadruple leverage long S&P Friday at the close within 2 minutes of the market close, just so you know.
Good night's trade.
I'm joking.
I know you
How
are.
would I do that? It was like,
right. I know.
It was like going into the abyss, as you
Yeah.
pointed out. I mean, the market was just absolutely like looking like crap.
Yeah.
I was totally joking about that. I didn't.
I know.
but we are
Well, do
seeing
you,
a I
well,
was
do you
just going to
think
say we
this?
are seeing a recovery and we're in between
Yeah,
fib levels. It's like there's no rhyme or reason for the recovery other than maybe being a little oversold, I would think.
people
No
are saying
technical reason.
plunge protection team came in last night,
Yeah, maybe.
right?
I guess or
I don't know.
I don't know who knows, who cares, but we are seeing a little bit of a recovery in the S&P and but I do agree with you, you know, Nasdaq's not far away, you know, and we're probably recovering into some, you know, previous support. There's I think, and somebody correct me if I'm wrong, there's an Apple event this week, isn't there?
Yeah,
Yeah, so that's going to be really interesting because you know you think about like the AI trade and you know where's the AI going to be? Is it going to be in Apple products? And well, it is going to be in Apple products. And is it going to make a big impact there? I think that's where AI is probably going to make the bigger impact around the markets is, you know, personal assistant type of thing. So it'll be really
yeah.
interesting to
It's the
see what
biggest
happens with that
Apple
one.
event since Eve ate from the tree of good and evil.
Sure, sure.
Anyway, that was a pretty big Apple event, I guess. So, uh,
That was a big Apple event for sure.
and they didn't even have an iPhone, so I don't know how they did it. Anyway, go ahead.
No,
Silly Monday morning. Okay.
but you look at Apple and it's outperformance, and the fact of the
Yeah.
matter is Apple I think is a good, and this is something, and I have to say hats off to Chris Weston. Last week he's like, I'd rather, you know, own Apple over Nvidia, and I don't think that's a bad trade just because, you know, Apple is, for all intents and purposes,
Bond.
it's a utility company.
Yeah.
I mean, you know,
Yeah.
we all pay Apple. At least here in the United States, all of us pay Apple. Those, and that's more than, you know, what, 60% market saturation, 70%. I don't know what the number is, but I know it's ridiculously high. Almost everybody has an Apple product. We pay Apple every month for storage. Everybody like is on a 1 year upgrade plan. We're constantly buying new Apple phones. It's built into our basically our billing system. So, you know, and look, I don't even use I mean I use Apple mobile products. I don't use any other Apple products, but I pay them every month and every year very consistently, like most Americans do. So the fact of the matter is this is a really great hedge, technology hedge against things that are maybe a little bit more sensitive to cyclical pressures or you know, market pressures. I think Apple, you want to be a buyer on dips, and you know, this I think is a very clear indication of that. But anyway, I think that it's an interesting story, and it's something that could move the markets. You know, it could keep the markets relatively buoyant. Let's put it that way. As you guys pointed out, gold's just, you know, still wedged up here against the highs. That hasn't really gone anywhere. We're in that really tight trading range above 2470. While we're above 2470, I don't think there's any reason to be bearish. I do want to point out that the dollar yen, you know, it is starting to roll over, and this is that 38% retracement. Just if you guys didn't see the tweet from the ForexAnalytix handle today, we have a 38% retracement. You see all these wicks coming up here. Now, Ryan, you pointed out on the week ahead video, there are a couple of different ways to trade the dollar yen. You know, I was on the short side, you were on the long side. And there's, you know, just several ways to skin this cat. I just shorted it up here this morning, near that 38% retracement into the sell zone. And I'm going to play it probably down to 142, and you know, I'm looking for an eventual break. But are you looking for an eventual break in the dollar yen?
I'm not looking for it. I think there's enough there to set up for one. It's a bit difficult if you go into to a wider chart. We've got some big fib confluence 140s, 139s coming off the, you know, a weekly chart. it's a real big area there. So although that 141.70 lows that we got on Friday matched the early August lows, just below it there is a big load of confluence. But with this thing at the moment, you got to be careful with the techs as well, because if there's a big bit of news, it's not going to give two monkeys about your techs levels and your coloured lines. It's just going to blast it through. So yeah, if we get I'll be interested if we get a break of those current lows, 141.70s. That might be worth. I might try a break trade, see if I can run it down to that next band of support, 140s, 139s.
Yeah, and you'll notice there's and I'll get rid of this one because that one's not as relevant as I think as the other ones are. As you have this support around, as you pointed out, around the 140, let's just call it 142 level. A break below that, you have a couple of hundred, a couple extensions that will come into play. 140, the big figure number. As you pointed out, there's a lot of confluence down here around 138. I'm looking for a breakdown into those levels. So I'm constantly looking for rallies to sell into, and I think today's opportunity is great because this is in my view, this is a pennant flag formation. So it's an eventual breakdown trade.
Yeah.
And the dollar,
it's a hope low.
What's that?
And it's a hope low. And the yen and risk have been trading in a pretty tight correlation for a while.
Yeah, well, let's take a look at that, Dale. Let's break that down. Let's take a look at the 6J, and this is going to make it a little cleaner. All right, so here's your 6J, and let's take a look at. Let's just add the S&P here, and maybe this will give us a better view of exactly what you're talking about, because you can see how this is exactly opposite of risk. So as the S&P goes down, yen spikes up,
right.
S&P recovered, which the yen just kind of consolidated. But you can see, as you pointed out, it is giving us a bit of a inverse correlation, which is exactly what you're talking about, Dale.
And notice the market's recovering with a stronger dollar.
Mm-hmm.
So I think things have flipped. That firm dollar supports risk now. Because it means that we're not in a recession, right? And a weak dollar is negative risk.
Yeah, and I really I agree with you, Dale. I do think the dynamics of the dollar are shifting. I think in a world that we live in with a rising twin deficit here in the U.S. and the U.S. being a the reserve currency, I think the dynamics of the dollar are shifting a little bit, and that's why I've been very vocal about this, saying that if stocks come down, I don't know if we're going to get the same response in the dollar as we normally would. Now, that doesn't mean that all dollars are going to be created equal. Maybe the dollar loses some steam against the euro or maybe the sterling, and really is a little stronger against commodity currencies or emerging market currencies, something in that situation. But I believe that the dollar yen is going to be very much a risk. Well, the yen is going to be a risk currency. Yeah. And maybe even the Swiss franc as well. So I do agree with you. I think that the dollar its role is going to shift a little bit this time around. And I try to remember, remind people, in the early 2000s, the dollar acted a little bit different as well. And this might be a bit of a repeat of that. So you have to be a little bit more cautious with the dollar, especially in this environment. And as far as unless there's
you have to change your paradigm of risk on and risk off and what it means for the dollar, because it's been hammered into and we've been hammering home this point for months now, Blake.
Yes, we have, and that's the thing, Dale, is a lot of people believe that stocks go down, you got to just buy dollars. No, it's not all dollars will be created equal. Not one shoe fits all, one size fits all, put it that way. But there's some really interesting developments, like, for example, talk about risk off. And if you guys are in the here, I'll just show you. If you guys are in the ForexAnalytix chat room, you want to see what positions I'm running. I actually just exited half of my pound New Zealand long that I picked up last week, and I'm going to take that back off. So you know, that's exclusive to the ForexAnalytix subscribers. And by the way, if you haven't taken advantage of the sale of ForexAnalytix, this is our 8-year anniversary sale. This is how we only do this two, 3 times a year. We get these prices down to these levels where you got to take advantage of it, you know, because if you don't get it now, you're gonna have to wait months and months and months before you get that price again. Anyway, going back into our chat room, the reason why I've been picking up the pound New Zealand on the long side, and why I took part of it off, is that Ryan pointed out earlier today in the ForexAnalytix chat room, we do have UK jobs data coming within 24 hours. So I got to be a little bit more sensitive to that. But I believe that a lot of these currencies, these risk off type of currencies, are going to give us great opportunities to be on the long side and of some of these explosive moves. So if you want to trade, oh, there's going to be risk off. And, I bought this thing because we're coming out of a descending wedge last week.
Nice.
Yeah, these are the types of plays that you want to be looking at should you think that stocks are going to roll over. Like I said, I'm all about shorting yen pairs and buying some of these crosses in this type of environment. And if you don't know how to play that, well, jump in the ForexAnalytix chat room and take advantage of it. So Ryan, I want to say thank you so much for being here today. K-Man, if you're listening in, which he very well could be with COVID, I hope you recover quickly. We want you back as soon as you can recover. And Ryan, thanks again for doing the week ahead video. And I know you have Daniel here with us today, Dale. So I'm going to pass it back over to you.
When experience matters, pips are. And Forex Flow will get you in the know. And to do that, you have to do more than watch the face show. That's the end of that poem. And Daniel, if you would do me a favor and accept the promotion, I'm going to make you vice president of F.A.C.E. So accept the promotion. There you go. You're going to be a panelist now. We have a lot to talk about. Daniel, welcome back to F.A.C.E. How are you?
Good. Can you hear me there?
Got you, Daniel. How are you?
Good. How about yourself?
Good. So, what's on the docket? I do eventually want to get to the grains because we talked about them last time, and they did continue to decline, but they put on a nice little rally. I think they turned. I actually bought Tech-Riem ETF on wheat and
Oh, good.
about a week or so ago, and I know we're pulling back a little bit, but could this be the time now that the dollar is breaking down? Even though we're bouncing today, dollar under pressure, everyone wants a weaker dollar. What do you think, buddy?
Yeah, and I want to get to the grains, but I have a little bit to say on them. But after watching, the beginning of this F.A.C.E interview, hey everyone, I'm Dan Hussey. I'm a senior
Dan
market
Hussey.
strategist with Zaner Ag Hedge. I primarily specialize in helping commodity producers, whatever you might be producing, manage your risk in the futures market. But yeah, the dollar right now is a huge proponent of just about anyone in the commodity space, and certainly any currency traders and at the forefront of your trading plan. I have up here to kind of add to just jump and continue that discussion on the dollar and some of the correlations we've been seeing here across the futures market. And begin with one of the strongest correlations I have watched throughout my entire career, everyone. This is a chart of the US 10-year. Okay, and overlaid here and on the left side of this x-axis is the 6J overlaid with it. So we were just watching, Blake had, the S&P overlaid with it. This is
Yeah.
a currency, the dollar yen. If I
Yeah.
were to change it to the
Yields.
Swiss franc, exactly. If I were to change it to the Swiss franc, it looks very similar. We've seen this extremely strong correlation for the last 10 years between currency markets and bond markets. It makes sense, folks, right? Yields have been changing and adjusting for the first time since the Great Recession in the United States, right? Since global interest rates bottomed out in 2008 through 2012, the period that we've seen the 12 years hereafter, well, now almost 15, I suppose, since the recession, we've seen effectively a rate rising environment. And during that process, the US dollar has had to kind of rebalance its valuation, right, on the global scene because of how those interest rates have moved around. And that correlation you see here between the dollar yen and the 10-year note has been a extremely strong correlation in, I mean, generally the history of both these
Yeah, look
contracts.
at that. Yeah. It
But
breaks apart occasionally. You could get misled
does.
for a few weeks and, you know, but
Good
overall,
example. Good example
yeah,
to that right here back in October, when, this is during a period where people were placing
yeah,
lots of bets, the interest rates, we were wondering if we're going to get a cut in December and, this, that, and the other. Now here, they seem to be very tight. I think that there's kind of a consensus in the trade, so to speak. And the reason I say a consensus in the trade is because of, I overheard you, Dale, that you might be short the dollar. Um, I think this Dixie chart we've been looking at together for
yeah,
almost every face interview, right? We've
yeah,
had a look at this. Everyone, this is a monthly chart of the dollar index, and I want to point out how far it moved from that Great Recession kind of low in value of
yeah,
the dollar to its new high up here at 115. And these 5-year periods of, I would say, 15, 20 point ranges we've been caught up in. The major question we have right now is this breakdown below this trend
yeah,
line support, right? Is this enough of a break to say, hey, we're going to test this low and start, another trend lower? Because you break this
yeah.
15 to 20 point range, you're back into the old 5-year range for the dollar, and you could unwind back down to that 200 month and the old lows around 90. You
Nice
just
look,
go
Daniel. I like it.
just back just back to where you came, right?
Yeah,
In the very short term, we are hitting that 18-day moving average, a little bit of a
yeah,
reversal pattern from Friday, but we are
yeah.
caught in what I would call pennant, a flag, a bear flag.
I'm waiting for your line, your orange line. Look at there's confluence at 102.50 if you go to where we are now. That's where I'm a seller. And then, I mean, if
Absolutely.
we start closing over 104, I'll reassess.
Yeah, and there's a lot of reasons I'm sure, Dale, you're picking that level. We obviously see the upward
Yeah,
sloping trend line that broke. A little,
yeah,
I don't know who coined this term, but the kiss your mother, old support, broken, now being tested as resistance before continuing your lower. It runs
yeah.
out the door, comes back to kiss your mom goodbye, and then heads lower.
Uh,
Um,
how
the
sweet. I wish I still could do that. If you guys still have your moms, you need to do that today. That's a great
yeah.
reminder and if she's far away, you could throw her a kiss over the phone.
And this 102 level, very important. It was originally a gap that started our year off with some bullish dollar activity. We've
Yeah,
unwound the start of that year. We took out basically the lows of the year, the gap up, and now we're, flagging below that level. That's not great for just price action if you look at this year in a vacuum, right? Then if you take a step back and you look at price action of the last few years, well, now you see we're testing
yeah,
major levels that if we break, this is very much my opinion, and humbly speaking, the start of a downtrend. So
yeah.
Dale is waiting for that rally up to sell into that 102 area. Also equal legs up. Like you said, a lot of confluence there. I can't disagree with that type of idea. I also, being a momentum trader, I'm looking for that break below 100, to become
Okay.
a net seller for that continuation lower because back below 100, kind of just a big psychological figure for the Dixie.
Oh, that would be a
Opens the
big
door.
breakdown. So I'm looking
Right.
for 97 on the next decline from 102.50.
Sure. And that would put you solidly below the
Right.
lows of 2023. That would be a big signal to this market. The monthly, the dailies, every
Yeah.
single market, chart would be making a new major low. And you'd be undeniably having to talk about
But
the trend lower.
you could make a big case, Daniel. What do you think of this? The high at 114, call it a 1400 point decline with sideways consolidation, corrective action, and a breakdown under 100 gives you 86, 14
Yeah.
minus 100.
I can see, right? You got that decline down, your
Yeah,
sideways price action, and then most technical traders start immediately thinking in our heads, right? Well, this distance
yeah,
down, project it lower, and it takes you
yeah,
right down into that, 80 that 86 area. And certainly when you go back and look at the long-term time frame targets, it takes you right down, or the long-term chart, that takes you right down into the old supportive lows from
Yeah.
2018 through 2020, the pre-COVID support for the dollar that then,
Oh, yeah. Interesting.
ultimately ran up. So,
Okay.
the levels that we're seeing in terms of projections for potential downside targets aligning with those big supportive levels, and that's all a trader can do, right, to try to develop a plan.
Well, you need a big bear market to get people to say, okay, I'll take the CBDC.
Yeah, certainly.
You ever think of that? I'm Mr. Conspiracy here on Face, but
Well,
anyway, I mean, why would people give up the dollar unless there's a dollar crisis?
certainly, right? And any, inflationary pressures, lots of different reasons. It can happen very quickly and it can happen slowly over a long time, right? As
Yeah,
we
yeah,
either lose faith in the currency and its purchasing power or look for alternative means for stores of value. I mean, it's a
yeah,
tale as old as time though, Dale. This has happened as long as fiat currency has been in existence. And anytime a government takes an asset and creates it into a currency, it becomes fiat. They're even in ancient Rome, gold was debased by cutting it with other metals.
yeah,
We like to think that there were standards, but there really haven't been. Anytime governments take money and create a financial monetary system from it, it gets debased, it gets
yeah,
devalued, inflation happens, and
yeah,
you just have to realize that on a long enough time frame, those things have to be accounted for. And unfortunately, we've never seen a currency on a long and from its existence until now, uh,
yeah.
it
So
survive, right?
is
They eventually fail, unfortunately.
so
They
is this
all
going to
have.
be the catalyst that the grains need that we start to become a more attractive um, spot to buy stuff because the dollar's getting cheaper?
And that's a great segue, right, into the commodity space, into the grains in particular, because grains alongside maybe gold are one of those assets that have actually been internationally traded since the dawn of civilization. We don't talk about grains that much, but they are kind of an international currency, and they rely heavily, at least our export market being in the United States, a very large producing breadbasket for the world. We have to export a lot of our grain to the rest of the world. And the US dollar transacts just like any other commodity and just like any other currency transaction, right? There's a
Yeah.
swap for dollars that occurs. And if dollars are too expensive to source, our export partners don't necessarily like to buy our commodities if they don't have dollars on hand already, which some of them, like China, do. That's a whole nother discussion. But
That's a political thing. That's another thing. China hasn't been buying U.S. grains, right, Daniel? They've been going to South America for their
that's correct.
purchases. Okay,
And
so let me
and
tell you, I don't care how things are politically between the U.S. and China. If the price is right, China will buy U.S. grain.
And that's the big $1 million question we're asking ourselves. And we are, folks, seeing some daily, what we refer to as flash sales. The USDA requires reporting of exports of over 100,000 metric tons on any given day be reported in a daily flash sale, effectively notice to the USDA, which then they publicly announce to the world that, hey, we have booked this in terms of an export. That happens daily. So those numbers come out in real time. Everybody looks at 8 a.m., 9 a.m. Central to see that USDA announcement, to see if countries like Mexico are still buying our corn, Japan is still buying corn. Do we want to see China buying soybeans, soy meal, corn? When those things happen, we know that that export market's working, and it's a clue. It's a clue that maybe price, and I have a chart up here of December daily continuation chart for corn going all the way back to 2008. You can see this daily upward sloping trend line on the lower bounds of the chart. Um, Real quick, I personally define inflation not by the peaks that the market hits, but how low the trough in the market doesn't go out. In other words, inflation's a rising tide, and these are the waves crashing on the beach. That rising tide might go a little bit higher every time, but it never quite goes out as far as it used to. And that, in my opinion, is the better measure for that rising tide of inflation. And if you look at things like row
Nice
crops,
metaphor. Yeah,
you can see going back to the 70s, this slow rising tide of inflation that etches markets like corn a little bit higher every decade. And
yeah,
that's the main, ride that we need to remember happened and has now effectively unwound. And countries like China that are buying these products hand over fist because they can't produce enough of them to feed to their 1 billion person populations. There's also other countries like India now that are coming online to being net importers of grain. That is in my opinion, the single biggest news story of 2024 that no one's talking about, is that India is importing grain from the rest of the world for the first time uh, on record. And they are probably going past this point of no return of self-sustainability in terms of population to agricultural production. So we have another nation of a billion plus people that is becoming reliant on net import for food products, making maybe these low prices for grain that, hey, we were at $8 of corn just 2 years ago. We're at under half that right now, making these prices maybe very attractive. And when you look at the long-term upward sloping trend lines, you start to realize this market really did have a period of not only hot, dry weather that caused a supply crunch in grain markets, but we also had an international
Yeah.
inflationary move. And then
And
we've had basically
Ukraine.
2 years of, correct, Ukraine, the wars. I mean, just every headline, right? I mean, every headline since
You know,
2020 has
Daniel,
been insane.
where Ukraine went into Kurtz, that's Russia's breadbasket. So
Yes, and
both,
you can almost look at the wheat market and time some of those,
yeah,
military actions on that chart.
yeah. So even bear market rallies are, even if we don't go back to $8, what a great trade from 4 to 6.
Absolutely. And six may be a little unattainable and like just for December corn, but the idea being is that we have really taken the wind out of the sails. We had a few years of pretty good production. We had a couple years of China going and looking at Brazil's production more so than the United States. And so we're left with lower prices. But like you said, Dale, it doesn't matter what the politics are. China's going to do what's right for China. And when prices are this low and the dollar is perhaps starting to decline as well, right?
Yeah, it's a deal.
These two things become a deal, right? If the dollar's
Yeah,
going lower and grain prices are low and they need to source grain prices, this becomes a deal for them. So
yeah,
we are anticipating, and maybe some of this buying over the last week has been that uptick in export pressures. It's also been if you look at commitments of traders, folks, in the futures, both corn and beans have gotten record short from the fund or the speculative category. In other words, those guys that don't take delivery of corn.
yeah.
When
How
the
about
December
commercials?
commercials are very long, and as they should be,
Okay.
because these are great prices, right?
Yeah,
They'll own it down here. They need it.
yeah.
But this what you referred to as potential short covering bear market rally that we've seen in corn and beans, and I'll bring up a chart of November beans here. You can see that similar move back up above the 18-day, reversing back towards. I don't want the nearest. I just want daily. There we go. Back towards the 55-day moving averages. Very technical reversal and move, and short covering rally, but it
It broke
hasn't
the
been.
downtrend.
It
Draw a trend line from those highs at say $5, and
it absolutely
just
did. We had a
broke it.
very, very clear channel here. Why isn't my drawing working?
There you go.
And that channel was, I defined it by the 18-day moving average. But
Yeah,
many times, Dale, as you pointed out, that trend line, it's effectively the same technical level people are
right.
watching.
It is.
Same idea. You break above it, you head back towards that $10 mark, which is a psychological level for soybeans. We broke above that. We spent a couple days consolidating above. And now the $1 million question is, does it have the ability to continue this short cover, get back above this 1030 area, which was the support that we broke below from July, and continue this short cover back, towards, $11, towards that 100-day and 200-day moving average.
Galaxy just made an interesting comment. With all this, the bear move in grains up until, it still could be a bear market, but
Now I
the
can see
fact
the
that
chat.
the grocery prices haven't reflected the decline in grain prices. Can you imagine if we have a bull market in grains, what's going to happen at the grocery store? If they didn't come down, the prices didn't come down during bear markets in grains.
Yeah. And, people say greedflation all the time, but the truth is you guys weren't paying the real prices that it costs to produce these things when we were at $8 corn either. If you were paying those
Oh, okay.
prices, you couldn't have afforded cereal. So the production supply chain for human consumption on grains is completely different than the charts we're looking at now. This corn chart, not a grain of the corn I'm looking at right now goes to human usage. And that's one big difference of what we're looking at here. This corn that we're looking at goes into ethanol and food stuff, not eaten by humans at all. White corn and wheat and oats, different products, definitely saw run-ups, but they were completely different. Now, wheat's an interesting product in and of itself, but but to your point, I think an even better example that really hits everyone's pocketbooks is crude oil and gasoline prices. Crude oil went up to 120. We're at half of that price valuation on the board of crude right now, and gasoline prices aren't half what they were, a year ago or what have you. So yeah, that's where that change in spreads in terms of market and productions goes. People have to
Well,
realize, though, that the cost that you are paying is also reflective of increased wages of everyone to produce it,
there you
increased
go.
wages of everyone to move it to you because it's not being grown in your backyard. It's had to travel thousands of miles to get to your grocery store, and the wages of all the people who have to sell it to you as well. Then you've also got the increase in cost to move it from point A to point B. Shipping costs are at multiples of what they were pre-pandemic. So while the raw commodity prices are down, the labor and cost of production is bigger than it's ever been. So you say greedflation, I say that's the cost of doing business and paying now the higher labor wages that we have to. And
I
that's
I say up
the
like a
economics of
rocket.
it.
I say up like a rocket ship, down on a parachute. That's what
Yes,
happens to wholesale prices. They
and
go up
margins
like
and
a rocket.
profits. Yep.
Yeah.
And margins and profits will get bigger for companies as they adjust to that. And now they will get much tighter as these commodities get bought up at low prices and they can no longer source them. It's interesting, right? The answer for high prices and low supplies
High
is low
prices.
prices and high supplies, right? And
Yeah.
now
Yeah.
the answer for low prices and high supply will be those companies becoming their worst enemies and now inflation taking back over, right? Them putting that money back to work, gobbling these prices up, competing. Wages should also continue to go up because wages haven't outpaced that. So the working man and everybody out there needs to continue to fight for, to try to make more money because there's profits and margins to be able to pay you, is the moral of the story. So,
Did you
yeah.
get a raise this year?
Me, unfortunately, I'm 100% commissioned.
Yeah,
So
I know. We have to give
and
ourselves, right?
ironically, my commissions haven't changed in 30 years. We joke in the futures market how
Uh,
we're the only guys who
yeah.
our commissions have been
Yeah.
the opposite of inflation. They've only ever
Yeah.
gone down.
Yeah.
Um,
Isn't it? Anyway, so can we wrap it with your view on the violent action we're getting in equities?
Yeah, I think, the violent action we've seen in equities is certainly, I think there's a little bit of end of month, quarter, summer kind of ideology here, right? We just came out of the Fed Jackson Hole meeting. That's always a really big time for them. I was looking over that S&P 500, just the cash chart here, because I was thinking, what to the downside have we missed? Have we sped through? Are there levels that the market, okay, you look back and now you can play the 2020 hindsight game. Gap
Yeah,
up here,
5,400.
middle of,
Yeah.
right.
Yeah.
There's a gap here. There's a little bit of a gap here at 53.52. You look a little further back. There's still an open gap from around 50.66. I'm not a big gap trader. I'm just thinking to myself, hey, gaps like to fill. The market arguably there's a bit of a double top-ish type feel to it up here at 56.50, right? The failure to get and break out with all of this strength and new contract highs and making new all-time highs, I should say, and being met with now some pullback, reflective of profit taking, the failure of that momentum. There's all the things you can say, but we seem to be now wanting to set up into a much larger, maybe trading range for equity indices. I think the break in the dollar and certainly gold's inability to break out too might have, kind of generated a larger risk swap or move here. But there's more money being moved around on hedge fund balance sheets than like ever before in history. So the liquidity that's out there is huge. And the lot sizes that traders are trading is huge. And I point that out because, this could very well have just been a few hedge funds wanting to take profit. in this environment, and nothing more than a couple day pullback that should be bought, into a 50% retracement. That's what this type of pullback can be in this environment. We almost have to adjust ourselves and realize that a 200-point drop in the S&P, it's what a 40-point drop used to be,
Mhm.
and that's something I'm still trying to adjust, because I'm used to the days, you know, 20 years ago, when the market, well, maybe not this far back, but the last time we had moves of this caliber into the 80s and coming into the early 90s, we were breaking out above 400, 500. And I just want to remind everybody that how quickly a market can turn from looking like, oh, it's going to roll over and be very bearish,
Yeah.
back in 1994, at that time, 40-point drop in the S&P. That's a 10% drop in the market from 480 down to 440. And then over the
Boom.
next year exploded, doubled in value, like it
Yeah.
was nothing. I'm not saying that that is exactly what's going to happen here, but boy, over the last couple of years, we've seen those types of moves in the market. We've seen consolidation that broke out, tests of support, breakouts again. I mean, every major move on the monthly chart seems to want to be bought up. Um, and my point of saying all of this is that, hey, we're starting to creep above old targets that we had talked about maybe previously too, but we're kind of consolidating in what could be a larger range. And in the very short term, this failure, I think, could be and this rollover could be very interest rate related. There's lots of talks. We've looked at the correlations there. There's a lot of financial policy that's being swung around. And it's interesting that this market kind of takes a turn right after the Federal Reserve goes to their Jackson Hole meeting. I don't want to say put the tinfoil hat and conspiracy theorists on, but it seems like the guys that make a lot of decisions made some decisions about what they want for the market over the next, near term, and that might be playing out, is kind of what I'm getting at. So
Okay.
technically speaking, I think there's some support down here around 5,300 on the S&P. That's the old highs that we, have chewed through, broken above, came down and, maybe arguably trapped some liquidity below, but have gotten back above. I am still bullish the S&P on the daily and monthly time frame above 5,300 for the time being. But I do think we're probably going to consolidate in, a range, or maybe have a period kind of like this, that we had in 2022, where, an uptrend, very pronounced uptrend occurred, a reversal and a failure to, kind of break out began. In this case, it was I don't want to say a stop hunt, or a failed top, but
Yeah.
a little bit of a blow off top there and reversal, and then set up in consolidation for a period. There's nothing wrong with the market doing that after, I mean, effectively doubling in value, right? Go back to 2023, we're trading below 4,000, we're trading above 5,600 here recently. Um, this market's done a lot of work. Pullbacks happen, and a healthy consolidation here isn't out of the question.
All right, man. Nice, very nice interview, Daniel. Thank you very
Well,
much.
everybody, thank you for having me, as
And
always.
Zahner's a good firm. Daniel's a good broker. If you want to find a broker and have full service for commodities and other things, and Daniel does full service. So hard to
Absolutely.
find nowadays. And usually you're just on your own with your mouse. But if you delve into areas that are outside of your realm of expertise, you need a partner. So
Absolutely.
Daniel, I appreciate your work. I always learn something from you when you're here, and appreciate you coming every quarter to tell us what you're seeing.
Love being here. Thanks for having me, everybody. You can always get in touch with me. You see my number scrolling there on the screen. We'll have Dale. You guys know where to find me on Twitter and everywhere else. You should all know me by now. But thanks for
There it
having
is.
me, everyone. Yeah, we will until next time.
We'll talk on the other side of the election.
Yeah. Have a good one, everybody.
All right, Daniel Hussey Jr., everybody. Follow him. Guy's been around, okay? He looks young, but he's really 75. And anyway, you can take the emotion out of the market. Yes, you can. And people are thanking you, Daniel. Thank you. I'll thank you too, my trading warrior brother. And everyone, you could join the team in 15 minutes for the morning edge. And if you're not able to do that, you know what you need to do to get in there. And Don't just count your pips, count your blessings. I'll see everyone tomorrow. Turn around Tuesday. Hasta mañana, Laura. See you later.